Massive news for Intel stock shareholders. Now, on Monday, the stock was already up 6.36%. After hours, the stock is up another 8%. Now, is it because I posted 3 Intel videos in the last 3 days? Maybe. Coincidence? I think not. No, I think it is coincidence. I wish I had such a pull in the market to be moving $90 billion companies on the public stock market. Although some of the comments will make you believe that yes, sometimes I can pump or dump a stock. No, I highly doubt that's the case. But in the last 2 videos for Intel, which were quite long, I can admit, I explain very well why I believe that one, Intel is too big to fail, and that's why it was a buy under $20, and 2, why I remain bullish on Intel despite the headwinds. Things that will turn into tailwinds in the future, but it will take time. It will take time. Yes, this is a small victory right now on Monday and at the time of making this video, but all in all, for my investment thesis to be correct, I think we still have a long way to go. Like I said in the previous video, I don't think we'll see Intel at $50 or $60 anytime soon. But I also said that Intel at $19 or so was priced as if this company will go bankrupt. And I don't think Intel will go bankrupt anytime soon unless suddenly the US government decides that, well, they don't need Intel anymore. Again, never going to happen. Now, let's discuss what happened after hours. Deal partnership with AWS, some comments from Pat Gelsinger as well, restructuring of the whole company, lots and lots of good information. So let's dive into that. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate it. And if you support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so right after the market close, we've got this, a message from Intel CEO Pat Gelsinger to employees regarding the next phase of Intel's transformation. It's funny because we also got a letter from Andy Jassy, CEO of Amazon, talking about the culture of Amazon, etc., which funny enough is the next video that will probably come out on Tuesday. So he starts off by saying, all eyes have been on Intel since we announced Q2 earnings. There has been no shortage of rumors and speculation about the company, including last week's board of directors meeting, so I'm writing today to provide some updates and outline what comes next. Let me start by saying we had a highly productive and supportive board meeting. We have a strong board comprised of independent directors whose job is to challenge and push us to perform at our best. To be honest, the missing thing here for Intel was to have a activist investor. Maybe that will come, maybe not, but that was definitely something I had on my bingo sheet, but did not yet happen. Continuing here, and we had deep discussions about our strategy, our portfolio, and the immediate progress we are making against the plan we announced on August 1st. The board and I agreed that we have a lot of work ahead to drive greater efficiency, improve our profitability, and enhance our market competitiveness. And there are 3 key takeaways from last week's meeting that I want to focus on. 1. We must build on our momentum in Foundry as we near the launch of 18A and drive greater capital efficiency across this part of our business. 2. We must continue acting with urgency to create a more competitive cost structure and deliver the $10 billion in saving target we announced last month. And 3. We must refocus our strong x86 franchise as we drive our AI strategy while streamlining our product portfolio in service to Intel customers and partners. We have several pieces of news to share to support these priorities. So 1, the big one, I think that's the biggest one of all here. So Amazon Web Services selects Intel Foundry. Today we announced that we will expand our strategic collaboration with AWS. This includes a co-investment in custom chip designs, and we have announced a multi-year, multi-billion-dollar framework covering product and wafers from Intel. Specifically, Intel Foundry will produce an AI fabric chip for AWS on Intel 18A. We will also produce a custom Xeon 6 chip on Intel 3 that builds on our existing partnership under which Intel produces Xeon scalable processors for AWS. More broadly, we expect to have deep engagements with AWS on additional designs spanning Intel 18A, 18AP, not the watch, and Intel 14A. This framework reflects the power of our better together strategy, anchored in our integrated portfolio across foundry services, infrastructure, and x86 products. If you've seen the Intel presentation, I believe it was a month or two ago, it's all about, and I won't say an open ecosystem, but it's a big ecosystem with multiple partners. And that's something that Intel in the past did not really do. Maybe it tried, but didn't try really. Now it really opens up. So the more partners with good technologies that can offer their services, that can work together, the better it will be for Intel's future and Intel customers as well. Continuing here. With the 4 nodes in 4 years finish line in sight, we are beginning to see a meaningful uptick in interest from foundry customers. This includes continued momentum in advanced packaging, which remains a meaningful differentiator for foundry as we have tripled our deal pipeline since the beginning of the year. So that's huge. We've talked about the previous comments from the CFO that were made, I think, a week or so ago. So it's nice to see this reaffirmed. Plus, we've got some extra information here. The fact that the deal pipeline has tripled since the beginning of the year. That's quite good to know. Second, US Secure Enclave Award. So earlier today, we also announced that Intel has been awarded up to $3 billion direct funding under the CHIPS and Science Act for the US government's Secure Enclave program. This program is designed to expand the trusted manufacturing of leading-edge semiconductors for the United States. This is basically showing you that, yes, Intel is too big to fail. The US government will definitely push companies to use Intel Foundry. There's no other way around the fact that, well, it's a US government darling. Yes, it should have been much better, but they will never let it fail, in my opinion. This news, combined with our AWS announcement, demonstrate the continued progress we are making to build a world-class foundry business. Again, it's not about being much better than TSMC, because that's not going to happen anytime soon. And their goal by 2030 is to actually be the number 2, not the number 1, the number 2. And to be honest, being the number 2 by 2030 is already a very, very ambitious goal. And if it works out, well, a very lucrative one as well. Continuing here, they say, to build on our progress, we plan to establish Intel Foundry as an independent subsidiary inside of Intel. We've talked about that. The CEO have talked about that as well. CFO has talked about that. This governance structure will complete the process we initiated earlier this year when we separated the P&L and financial reporting for Intel Foundry and Intel products. A subsidiary structure will unlock important benefits. It provides our external foundry customers and supplier with clear separation and independence from the rest of Intel. Importantly, it also gives us future flexibility to evaluate independent sources of funding and optimize the capital structure of each business to maximize growth and shareholder value creation. There's no change to our Intel Foundry leadership team, which continues to report to me being Pat. We will also establish an operating board that includes independent directors to govern the subsidiary, which is great. This supports our continued focus on driving greater transparency, optimization, and accountability across the business. A more focused and efficient Intel Foundry will further enhance collaboration with Intel products, and our capabilities across design and manufacturing will remain a source of competitive differentiation and strength. This was bound to happen, and I'm happy it did. Yes, I'm also very, very happy that they do not spin this off. Now, a key priority for Intel Foundry is to increase capital efficiency. Our manufacturing investment across 3 continents have laid the foundation for a world-class foundry for the AI era. Now that we have completed our transition to EUV, about time, that comes from ASML, costs a lot of money and a lot of time, but finally they've made that shift. It's time to shift from a period of accelerated investment to a more normalized cadence of node development and more flexible and efficient capital plan. We will maintain our smart capital approach to maximize financial flexibility as we complete our manufacturing build-out, making some adjustments to the near-term scope and pace of our manufacturing expansion. So a couple of points here. 1, with regards to Europe, we recently increased capacity in Europe through our fab in Ireland, which will remain our lead operation hub for the foreseeable future. We will pause our projects in Poland and Germany by approximately 2 years based on anticipated market demand. Malaysia will remain an active design and manufacturing hub through our existing operations. We plan to complete the construction of our new advanced packaging factory in Malaysia, but will align the startup with market conditions and increase utilization of our existing capacity. Last one here with the United States. There are no changes to our other manufacturing locations. We remain committed to our US manufacturing investments and are moving forward with our projects in Arizona, Oregon, New Mexico, and Ohio. I mean, does it surprise you? Not really, right? Because if you want the help of the government, then you definitely have to, invest in the United States and make sure that thousands of Americans get jobs thanks to that investment of the US government and basically taxpayer money. Then they talk here a little bit about Intel products portfolio, focus on x86, the recent AWS announcement, etc., etc. They say this, alongside all of these changes, we're taking steps towards simplifying our portfolio to unlock efficiency, accelerate innovation, and deliver more integrated solutions. This includes moving our edge and automotive businesses into CCG, where we have a big opportunity to leverage our core client business and extend our leadership in the AI PC category to a wide range of vertical edge solutions. Again, with the AI stuff, it's purely a marketing thing. Like I said in the previous videos, customers like me and you, what do we want from a new PC, a new laptop? Better price, better performance, and better battery life overall, right? That's about it. If it can do cool AI stuff, that's great. But we want the basics to be better. We want Intel to be competitive against NVIDIA, against AMD, because, that means that the prices should come down. Hopefully that will be the case. In next, we will be focusing the business on networking and telco, and we are moving integrated photonic solutions into data center AI as we focus on driving a more focused R&D plan that's fully aligned with our top business priorities. In addition, we are integrating our software and incubation business into our core business units to foster more integrated roadmaps, unlock efficiencies, and create value. Now, as for the restructuring and cost cuts, they say this. To our voluntary early retirement and separation offerings, we are more than halfway to our workforce reduction target of approximately 15,000 by the end of the year. We still have difficult decisions to make and will notify impacted employees in the middle of October. Additionally, we are implementing plans to reduce or exit about 2/3 of our real estate globally by the end of the year. I mean, this is really Intel throwing the, what do they say in English? Throwing the kitchen sink at it or something like that. So really trying everything right now, ripping off the band-aid. Yes, it will hurt in the short run, but I think that's what they have to do. That's what they had to do already quite a while ago. So hopefully it works out. As we continue acting with urgency to execute the plan we announced last month, we are also working to carefully manage our cash as we meaningfully improve our balance sheet and liquidity. This includes through selling part of our stake in Altera, which is something we've talked about publicly several times and has long been part of our strategy to generate proceeds for Intel on Altera's path to an IPO. All eyes remain on us. We need to fight for every inch and execute better than ever before, because that's the only way to quiet our critics and deliver the results we know we're capable of achieving. We must maintain our focus on innovation while also becoming an engine of operational efficiency and financial performance that's built to win in the market. As I've said before, this is the most significant transformation of Intel in over 4 decades. Not since the memory to microprocessor transition have we attempted something so essential. We succeeded then, and we will meet this moment and build on a stronger Intel for decades to come. Look, this is great to read and hear, but at the end of the day, talk is cheap, right? Talk is cheap. I think we are all waiting for the next quarters, right? Because it's not something that will suddenly magically make Q3 or Q4 an excellent quarter. No, these things will take time. And like I said, execution is key. It's great that they know that, there's a lot of pressure on Intel, lots of pressure from shareholders, but definitely pressure from the governments as well. This news here with AWS, all of this letter is great, will move the stock, maybe a short-term thing, but long-term success, long-term gains for shareholders will only be created if Intel succeeds to turn everything around. If Intel's business becomes more and more profitable, becomes better each and every year. They come out with better products that become more and more competitive, maybe even, yes, leadership products, as Pat says. So yeah, I guess we will take the short-term win for now. Now with the after hour jump, we will be at $22.66, which is still between the 20 and the 50-day moving average. The 50-day one sits at $23.60. The 200-day one, well, we still have quite a while to go to reach that. Sits at $31.59. On the weekly, we're not oversold anymore, so that's great. So yeah, this range right here could be a nice little bottom. Of course, this means that, yeah, all the way back here, 2012, now closer to August 2013, yeah, this could have been the bottom, just under $20. Again, could have been, we don't know what will happen. We of course have the Fed meeting on Wednesday that could definitely move the market, whether it's going to be a 50 basis cut or a 25, or if they listen to the politicians who want a 75 basis point cut, remains to be seen. But from an Intel's perspective, this was a very much welcomed piece of news. So yeah, that's all you needed to know right now. Hopefully you liked it. Yes, I know a lot of reading, a lot of talking, blah, 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 but I think it was a very important piece, especially after the last two videos I made. Again, for once, my timing was on point. So yeah, if you like this type of videos, hit the thumbs up button, subscribe, notification bell on, do all of that. And if not, thumbs down, fine by me as well. And I see you all in the next one. Bye-bye.